Hello, everyone. So, in this session, we will be discussing one of the most fascinating sectors in the Indian stock market. So, I'm going to talk about the IT sector. So, you have seen the rise of the sector and the dramatic fall. So, if you see the Nifty IT index has been on a wild ride over the past few years. And today, in this session, we will try to analyze its past trends, the current state of the sector, and the potential future direction to help you to understand whether another bull run is on the horizon or if a caution should be the name of the game. So let's start with understanding the bull runs and the correction during the past time. Okay, so let's look at the past now. If you observe from the COVID time, right? So between March 2020 and Jan 2022, that 2 years, if you take, the Nifty IT index have witnessed an unprecedented bull run and almost 260 percentage from 11,000 to 39,000 level. But this growth was followed by a steep 33% correction in just 6 months. After this, if you see, the index have entered into a consolidation phase, and then it was fluctuating between 26,000 and 31,000 for the next 18 months. So you see the way it have risen, the bull run was almost 270 to 60 percentage from 11,000 to 39,000 level, and then steep fall almost 33 percentage. Considering the bull run, that is nothing, but still the steep fall of 33 percentage in just 6 months. And then if you see, there is a consolidation between that 26,000 to 31,000 almost for another 18 months. And now finally, a mini bull run began in November 2023. So last year around this time, and again almost 40% return in just 1 year so far. If you see, there is a 40% return. And these trends actually highlight the cyclical nature of the market. So, of course, the market moves in a cycle, and exactly that's what it is actually highlighting. There is a bull run, there is a correction, there is a consolidation, there is a bull run. So normally every bull run is inevitably followed by a correction. So that's what exactly you have seen from 2020 to 2022 Jan. There is a massive bull run, then there is a correction, 33%, and then there is a consolidation, and then there is a 40% bull run. So what is the lessons for investors, or what about what you understand with the volatility or about the patience? If you look at the IT sector's journey, that teach two critical lessons for investors. First, never panic sell during a bear phase. So instead, hold on and wait for the cycle to turn. So always understand IT sector is always relevant, and there is nothing much to happen in that anyway. The export and everything is going really good, so that the future prospect is there. So you don't want to get panic at that point of time. The correction is essential. Now what you see in Nifty is also the same, right? There was a huge heavy bull run, and now there is a 10% correction, which is essential. So that's the first point. And secondly, the volatility is intrinsic to equity market. So when you're trading in equity, that is something which is already inherently present. So if you're not comfortable with this ups and downs, then equity investment is not for you, and that's not the game for you. You need to try with other investment, or simply sit with some SIPs and ignore all these things. Okay. So see, understanding these principles is very much essential for navigating the sectoral investments effectively. Anyway, if you look at IT sector, there is a prosperous future at any point of time. That's where we are getting maximum forex also, if you see on one side, right? So the export demand is so high, and the forex income is also very good. Now let's try to understand the current state of the IT sector. So to assess the IT sector's present condition, we look at the top three companies. So whenever we talk about IT sector, the top three companies which comes to use TCS, Infosys, and HCL Technologies. So these three giants set the tone for the industry. Like when we talk about Bank Nifty, we talk about HDFC and then ICICI, SBI. Like that, here we talk about TCS, Infosys, and HCL Technologies. Right. So if you look at the recent results, that actually showing some mixed signals. If you look at TCS, the earnings per share EPS, right, earnings per share actually grew by 12.6% in financial year 2024, which is signaling healthy growth. So EPS of 12.6% is very, very good. On the other hand, if you see the revenue growth have slowed to around 3.4% year on year. So the total contract value, if you look at this point of time, remains stable at around 8 billion per quarter, and that reflect the robust project pipelines. So then that side it is very good. Now if you look at Infosys, the revenue growth stands at around 3.1%, right? And that's slightly better than the initial projection also. So whenever something is coming better than the projection, that's a very good sign. And their deal pipeline remains strong. So see, the thing is that the total contract value has dipped slightly in the recent quarters. Otherwise, everything is looking fine. And if you look at HCL Technologies, so here also earnings per share, the EPS have grown by 8.4%, as we have seen in case of TCS. Here it is slightly less than TCS, but 8.4% is again very good, with a total contract value consistently around 2 billion per quarter, and the revenue growth is moderate, profitability still remains strong. So if you look at this is the fundamentals are very strong. Now let's look at some of the macro factors which are shaping the IT sector. So two major macroeconomic factors that are likely to impact the IT sector are US economic policies. That's the most important one. And we will talk about Trump re-election and everything, and the Fed Reserve's rate cuts. So these are the two macro factors, in fact, which is going to affect the IT sector. So if you look at the US economic policies, now you see with Donald Trump as re-elected, and he is expected to reduce the banking regulations, so the financial service sector in the US could expand. That will lead to higher IT spending. So I told you just before, our IT sector is exporting more. Exporting means the service export here I'm talking about. So the chances are higher and the future is very good. On the other hand, if you look at again the Fed Reserve rate cuts, historically rate cuts have increased IT investments as banks and financial institutions free up capital for large technology projects. So that way also, you will get benefit. And we have seen already Fed Reserve has cut the rate, and now again it is expected to cut the rate further. And when Trump comes again, there is a possibility that it will even cut further more. So what my point is, these two factors, if you see, it can create a very, very good conducive environment for growth in the IT sector over the next 4 to 6 quarters. So I'm still very positive on IT sector, and I keep investing in IT sector, and my outlook for the future is very much positive with respect to IT sector, and I bet on IT sector. Okay, so again, if you look at the long-term outlook, so the Gartner perspective, according to Gartner, okay, global IT spending is projected to grow at a compound annual rate of, CAGR of 9.6% over the next 5 years. So this near double-digit growth, it's almost 10%, right? It's a double-digit growth that again indicate strong long-term potential for the IT sector. But this optimism should be tempered, with a careful look at the valuations. That's again something which you need to see. That's again I have discussed already. Now, if you look at the valuation, at present, the Nifty IT index has, price to earnings, the PE ratio, very important ratio. I've discussed about this before also. So the PE ratio of 34.3, which is on the higher side compared to the historical averages. So this basically suggests that much of the optimism about the IT sector may already be priced in. So investors now should adopt a buy on dip strategy rather than rushing to invest at the current level. So again, FIIs are selling, so there is a possibility that you will be able to get chances on buying on the dips. So that should be the strategy, considering the PE ratio is, slightly higher than the historical average, which is around, at this point, it is 34.3. Now, what is the key takeaway? Let's talk about the data-driven decision, not random takeaway. Okay, so guys, when we talk about equity investing, it's not risk-free. Okay, so you are expecting the ups and downs for sure. And decisions should be guided by data, not emotions. There is no question of emotion here. So the IT sector, which is cyclical in nature, in fact, everything is cyclical. The current valuation and the macroeconomic influence that we discussed all point to a balanced approach. So on one side, if you see, the sector has a strong long-term growth prospect, but short-term movement could be influenced by the market corrections or even the external shocks. We don't know what is going to happen tomorrow, right? And in conclusion, what I can say is you stay informed and get prepared, stay prepared also. So the IT sector remains a cornerstone of the Indian economy and is a vital area for investors at any point of time. But navigating this space require a blend of patience, understanding the data, proper data analysis, and an understanding of the market cycle, which we have already discussed all these. So if you are considering investing, focus on the fundamentals and look for opportunities during market dips. Don't rush, wait. The strategy should be buy on dips. I hope things are clear. So that's about this session. Thank you for joining me. See you in the next video. Thank you so much.